So today I want to talk to you about how to pay tax on your investments in the UK. Now this is a question I get quite a lot, and I think actually it's a barrier to people starting to invest. So I wanted to tackle some of your questions in this video so that you can go ahead and invest confidently. So welcome to the Looking After Your Pennies YouTube channel. My name is Charlotte Jessup. I'm a financial educator and a financial coach. Now, before I get into this topic, I do want to put a disclaimer. This is financial education. Obviously, we're talking about investing and tax here. So you may need to speak to an advisor about these topics for your personal situation. This should just be a small part of your larger research on the topic, and I'm not going to go into full detail here. Your personal circumstances are going to impact on the information that happens in this video. Some of it may be true for you, some of it might not. Use this as a kind of springboard into doing further research into this topic. So we're going to look at 4 areas. We're going to look at what taxes there are, when you do and don't have to pay these taxes, how much you'll have to pay, and how you go about paying them. So let's have a look at what taxes there are. So there are 2 main taxes that you'll need to pay on your investments. And I should say at this point that when I talk about investments in this video, I am talking about investing in things like the stock market, not so much alternative investments. Some of the taxes that I'm going to talk about in just a second do apply to other things such as property, but I'm not going to focus on that in this particular video. So the first one is capital gains tax. So this is a tax on the profits you make when you sell an asset. So this could be stocks, for example. So it's the money that you make, so the difference between what you bought it at and what you sell it at, and you will pay a tax on the difference. Now, you do get an annual personal allowance on capital gains tax. And at the time of recording, this was £12,300 per tax year. Now, the other tax that you may have to pay on your investments is dividend tax. Now, dividends are when a company that you've invested in distributes some of its profits to shareholders. So you might get a small amount of money from them. Now, this amount of money is liable to tax. Again, you get a personal allowance on this, and currently it is £2,000 per year. So with these personal allowances, it means that you can make that amount of money before you have to start thinking about paying tax. Now, for most investors, like most average investors, this is probably enough. And when you start making more than this, then you might need to speak to somebody to help you with it. But if you are just a casual investor, you might find that you don't actually go over these limits, most years. So when do you have to pay these taxes and when don't you have to pay these taxes? So I've kind of already covered the when you do. These will only apply for certain types of accounts. So if you are investing in a general investment account, then the money you make, you will be potentially have to pay these taxes on. If, however, you are investing through an ISA, this is a tax-free account. So you won't have to pay capital gains tax or dividend tax on any money you make within that ISA. There are a few other situations where you don't have to pay capital gains tax. So this could be on UK gilts and things like premium bonds. You don't have to pay capital gains tax on these. You also don't have to pay capital gains tax on things like betting or lottery wins. However, you will have to pay capital gains tax on things like some property sales and sales of other things that are over like £6,000. There's a whole set of rules on this, so you do need to go either speak to an expert about this or check out the government website if you think this applies to you. So how much are these taxes then? Well, like most taxes, they come in the form of a percentage. Capital gains tax has 2 different rates. There's actually one that is for property and one that's for kind of like everything else. So I'm going to focus on the everything else because we're talking about things like investing in the stock market. Now, the amount of capital gains tax you have to pay depends on your income. So income is broken down into different brackets in order to pay income tax. Now, when we're looking at paying capital gains tax, the amount that you make in terms of gains in that year is added to your income. Now, some of that might fall into the basic rate if you are a basic rate income taxpayer, and some of it might fall into the higher rate. When we're calculating capital gains tax, it's about all of your income. So income from a job in that year, and also the income from your capital gains. Now, for anything that falls below the kind of basic income tax rate, you will pay 10% capital gains. And then for anything over that basic income tax rate, you will pay 20% on that. Now, obviously, if you're a higher rate income taxpayer anyway, or an additional rate income taxpayer, then you're going to fall in. All of the money that you make from your capital gains is going to fall into that higher rate. So you'll just pay 20% capital gains on all of it. So what about dividend tax then? So there are 3 rates, and again, they are calculated based on your income tax bracket. For those of you that pay basic rate, this will come in at 7.5%. If you're a higher rate payer, it's 32.5%, and for additional rate, it's 38.1%. Now, this is going up. So in April 2022, there's going to be an additional 1.25% added onto each of these rates. And this is designed to pay back some of the additional costs of things like NHS and social care that we had during the pandemic and going on into the future. You have to remember when calculating the tax on this that you do get those personal allowances. So you can take those off before you start calculating this tax. So how do you go about actually paying this then? Well, the easiest way for both of these is through a self-assessment. Now, if you're self-employed, you'll have been completing these anyway, most likely. Now, if you're not self-employed, then you will need to look into the self-assessment process. You can do it all online. It's on the government website, and actually the process is not as complicated as you think. You will need records though. So for example, if you're looking at things like capital gains, you will need the price that you bought those assets at and the price that you sold them at. Once you have completed all of this information, HMRC will tell you how much tax you owe, and you can go ahead and pay this online, with your card, type all the information in. You may want to seek an accountant to help you out with this, and if you are running a business like I do, then you may already have an accountant and they may be able to help you with this already. Like I say, if there's any sort of complications or anything that's not quite straightforward with this, then you may want to reach out and get expert help. For the average investor, if you're investing in an ISA, then you don't have to worry about this anyway. If you're only investing small amounts, then you probably won't have to worry about this anyway. Because of those personal allowances and these amazing tax-free ISAs that we have, for, normal people, these things aren't that much of a concern. But it is worth familiarising yourself with what is involved, just in case you do find yourself nudging these thresholds in the future. If you have any comments, then please do leave them below. And whilst you're there, don't forget to hit like and subscribe so you can catch up on my future videos. I will see you in the next one.